we're going to get started right on time, 9 o'clock. So we have about a little bit less than 3 minutes. Appreciate everybody being here today. We're going to get a bunch of stragglers coming in. I shouldn't say stragglers because we're starting at 9, which is what we advertise. So anybody that's not here yet is not a straggler. Good morning, Michael, Sonia, Amadeo. Good morning. Where's everybody from? Let's type in some countries here. I'm in Chicago. Morgan, good morning. Jim David, Texas is here, represented. Great state of Texas. I heard some of your legislators fled the state. I read an article about them fleeing the states so they didn't have to vote on something. California, DC, Michigan, Florida, Cleveland. Wow. Dominican Republic. Sonia, welcome. Nashville. More Floridas. I'm jealous. Atlanta, Baltimore. Brett says, gonna try the micro E-mini S&P myself. Very cool. Philadelphia area. My brother Mike's moving to Philadelphia. His headquarters is there. So he's moving from Chicagoland area to Philly. Actually, I think today or tomorrow, like the truck is loading up the contents of the house. Rhode Island, Los Angeles, Florida, near Cuba. Morgan's near Cuba. Are you Key West? That'll be really near, right? Boca Raton, another Florida, Virginia, New Jersey, Utah. Utah, good morning. You're up early. Appreciate that. I'm kind of stalling everybody. I want to start exactly at 9 o'clock. I don't want to get ahead of myself here. And kind of move some of these windows around so I am ready to hit the ground running. Italy, good morning. Mario, visited Rome a couple of years ago, right before COVID. It was awesome. Never had better food. Brazil, love to go to Brazil. I have never been there. Good morning from Vancouver, Canada. New Orleans, Bismarck, Delaware, Tucson. Tucson sounds hot. Another Texas. Upscale locations past King of Prussia. Port Townsend, Washington. Cologne, Germany. Nice. Vegas, baby. Oh my goodness. John, good morning. Thanks for being here. We're going to get started any second now. I'm just waiting for the night. It's 9 o'clock on the dot. Good morning. My name is Jim Cagnina with NinjaTrader, broadcasting live from Chicago. I appreciate everybody's time this morning. I just wanted to pop up NinjaTrader website really fast. I do want to remind everybody trading futures, options and futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although that could be an equation for opportunity, which I think is why we're all here, it's also an equation for risk. So be careful, only fund your futures trading account with risk capital. If you're not sure where you fit on the risk capital curve of things, feel free to reach out to your NinjaTrader customer service representative, to me. I'll cut and paste some direct contact information in there. My personal definition, most of you guys know, for those of you who don't know, is money I could afford to lose, doesn't change my lifestyle, doesn't lengthen my retirement horizon, and doesn't overly anger Mrs. Caggs. Now, the third part's a little tongue-in-cheek, but not really. Stress in life matters. Be in a good place. Be comfortable. Easy with the day trade margins. Yes, we offer low day trade margins at NinjaTrader for sure. But take it. Use them gingerly. Use them wisely. If you're not sure how to apply it, and what size account you should have, and all that stuff, let's have a confidential conversation. And be happy to. In any event, we're on a real-time practice account today. I'm in sim mode. It's real software, real-time data. I'm just logged in simulated live mode. So these are not real trades, but they're simulated, give us a really good experience of the software. In any event, feel free to type in questions. I'll try to pick them off as I go. I'll have to toggle my glasses on and off for that. But man, CPI was the thing today, right? CPI number came out, and I'll go into a little bit more detail on what the numbers actually were. But let's just take a look at, just really quickly before I go to a daily chart, let's just kind of take a look at 10-minute chart. And I have my charts organized a little differently, by the way. Because I'm limited to one screen for the presentation, I'm trying to squeeze everything in. And I have a decent sized monitor. It's not huge, it's not tiny, but I have 1, 2, 3, 4 charts I'm looking at. I have quote board on the right, market analyzer. I have at the very top of the screen, I have the control panel, I call it. It's very powerful. A lot of stuff you can do here. And there's some of my sim account information is up there as well. So, but let's just look at this. I mean, this candle right here, this green candle right here, the 730 to 740 bar was substantive, right? I mean, high to low was literally, what is that? 13 handles. 13 handles, and each handle, or each point rather, handle point, same thing, same nomenclature, is worth $50 per contract, right? On a big E-mini S&P contract. So 50 times 13, you do the math. I mean, that was a $650 move per contract. And then we had a continuation candle, a little bit of a hesitation, continuation, all-time highs in the S&P. Pretty impressive, all-time highs in the S&P. A lot of factors. We've been talking about this for weeks now on why that is, but it's really given us a really nice picture right here. The volume profile is forming at the top again. It's this node is, in my opinion, is going to accumulate a lot bigger than the node at the bottom. You could consider this a double distribution. This is volume that happened prior to our 730 number economic release, and then the market kind of shifted up, right? The paradigm of this thing shifted up, and now we're trading up here at a pretty, around 44.40. It was a pretty impressive move. I have a fib line, high to low, real simple. We have not approached the 61.8% yet since the big rally this morning, and we're kind of like, we're just kind of hovering now with an inside bar. Previous bar is an inside bar. The current bar is technically not quite an inside bar, but it's kind of slowing down and trying to figure out its direction. I'm going to compare yesterday to today. Now, one of the things I do have on the chart that's new that I haven't shared before is I added the high in the low price, and it tracks it. Let me get rid of the crosshairs for a second. And the software tracks the low of the day with this dotted red line, and it tracks the high of the day with this dotted green line, right? So it's kind of showing me how the range of the day is expanding over time, and eventually it won't expand anymore, right? It'll end up being, we'll be trading within the range from high to low, and that's where I drew my fib line from, high to low for the entire session, right? It's a 23-hour session. We started last night at 5 o'clock Central Time. And that's what we're looking for. Counter trend trade right now, it could be profitable, or it could not be profitable. I'm not a fan of counter trend trades right now. However, it does look like we have an area of support. 1, 2, 3, 4, 5 candles worth of resistance up here. I'm sorry, I said support, I meant resistance. And so now we have an area to execute counter trend if we're so inclined. I'm a little worried because of the wicks on this candle here. A lot of buyers came in, and a lot of buyers came in on this candle. So I'm a little bit worried about sustainability on the downside right now. But we'll see. It's only 9:05. We have a lot of time to talk about this. Wilson asked a great question. My thoughts on Bollinger Bands, and I think tools like Bollinger Bands, VWAP, and other things like that are good tools. I would focus on, my advice and my opinion is, focus on 2 or 3 things that you can get a groove in, right? That you can become a master at and apply that, right? I'm pretty simple. I have an oscillator at the bottom. I have volume profile, fib line. I have a moving average cross, which is still kind of, actually still kind of diverging right now. And that's it. That's all I'm looking at. Now, I used to be way more complicated than that. And, over the many years I've been doing this, I've kind of freaked myself out. So simple's better. And that's it. The golden rod, if you're referring to this golden point of control, this is the volume point of control up here around 42-ish. Let me get my crosshairs out so we could drill down and tell you exactly where it's at. 41 and a quarter. That's just the volume point of control. That's all that is for the volume. And what I want to do though too is I want to capture yesterday's point of control in volume profile and compare it to today's. Right, and we're trading way above that. Right, we're trading way above that. We're trading below it before the number came out, but then the number kind of changed everything. Right, so we're in bull mode right now, looking for places to buy, in my humble opinion. And you could do this in a micro E-mini S&P or in a big ES, in a classic E-mini S&P. And it's named kind of funny, right? Classic E-mini S&P. The word E-mini freaks everybody out, but this is a very big contract right now. I mean, it's literally the notional value of one contract is literally $50 times the price, right? So if you take 50 times, let's just go 44, 40 even, just for the sake of ease, the notional value of one E-mini S&P contract is $222,000, right? And people are going to call and say, hey, could I have a $500 day trade margin, which you can. So there's a lot of leverage there, so be careful with that. But this is a pretty big market. The micros, let's divide by 10, is 22,200 notional value. Still a big contract, right? Especially as related to your SPY ETFs, your QQQ ETFs. I mean, they're not in the same league in terms of purchasing power. So keep that in mind. And there's a lot of volume that's traded on these markets. Although we're kind of light today. We have 335,000. You can see that on the right-hand side here on my quote board so far on the front month on the E-mini S&P. And it's decent. We're way ahead of yesterday. But we still got some work to do. It's still a low volume, summer months. Be patient, kind of idea. So let's take a look at this. Let's take a look at some trade ideas. Where would I try to get long at? Well, the RSI is kind of curving back down a little bit here. I have my red line in the middle. That's my 50 line. I really like to see oscillations around the 50 line and the velocity for which it crosses over the 50 line, but we're pretty far away from that right now, and we might not get there. We might not get there during this session. So really, what I'm looking at is the candles now to say, all right, where's my entry at? The 61.8 is way down here. It's pretty far away. It's totally attainable though, and this is not a bad target. Somewhere between 61 and 50. Again, though, it's going to require patience. Alternatively, we got higher lows, and then kind of a side, not really a higher low, but kind of close, right? The market's kind of shooting back up to the point of control, right? Which where the most volume is so far today. So, there's from a conservative trade point of view, trying to find places to buy, be closer to the 61.8. For an aggressive one, I want to kind of look at these candle lows, kind of envision another lower low, and these wicks being attacked, right? So let's go ahead and do that. I have my chart trader already on, right? So it's chart trader. I have it hidden, right? Just to give us some more screen. I have my my crosshairs up, and literally I'm just going to pull down to the low of this particular wick, and then maybe one or two ticks above there, and then I'm going to right click, and I'm simply going to choose what I want to do, and I want to buy one contract at 44.36 and a quarter, and I'm just going to click on it. Now, and someone asked about the ATM strategies. We'll talk about that later. And literally what I just did, if this were a live account, although it's a sim account, I would have sent a limit order to the exchange, right, to the CME group, which is, they run their Globex trading platform, which is, their matching engine for matching orders, buyers and sellers. And I just sent a limit order to buy one at 43.36. And I won't get anything. I won't get a fill. I won't buy anything until the market comes to me, right? I'm being patient. I want the market to come to me. And that's kind of my idea right now. And again, it's a little bit more aggressive than what I'd usually do with the classic, because I'd wait to get down here to that 61.8% level. But let's go ahead and do it. We have plenty of time. It's 9:11. We just had a new bar. I have a 10-minute chart. It's a 10-minute chart, time series chart, candle chart. It's really the same as an open, high, low, close chart, except that the body of the candle's filled in with a color, right? So we have a red candle that's percolating right now. I don't know if percolating is a word or not, but I'm going to use it anyway. we make up words here in the live chat room. Jim asked, do you prefer candle in time or points? Example, you have a 10-minute candle over 10 tick range or Renko. Tick charts and Renko charts aren't for me. This is simply a 10-minute candle. That's all it is. It's really just an open, high, low, close a bar that's filled in the middle. That's all it is. So that's just my preference. That's what I'm good at. Some of the, tick charts, range bars, Renko bars, flex Renko bars. Those are things. They're different charting techniques that give you different information, and it's just not. It's just it's not what I'm good at. It's not what I focus on, and I don't want to suggest that there's a bad strategy there, but pick what you want to be good at and be good at it. Matthew, it's a good question. So Matthew says, will you recommend just trading the MES as a beginner or look into other futures markets too? So here's what I think, Matthew, and that's another great question. Futures trading is different than any other kind of trading. And in my opinion, it's again, I'm biased, but it's infinitely better. I think it's way better to trade these markets than anything else because they're transparent. There's one exchange, first in, first out on your orders. You see everything. And I think it's a good thing. But if you're brand new, never traded futures, or maybe never traded anything, then after your 14-day trial is over, the demo period, in my opinion, is to get comfortable with the mechanics of the trading software, the mechanics of the charts, the trading ladder, all the tools that you get available to us. And I'm just kind of touching this is the tip of the iceberg, all the stuff that you could do here with this platform. And so that's after that. And then, fund your account. You could fund as little as $400 and then, trade micros, right? And so the good thing about once you start trading real money, you go from sim to live money, like real dollar trading, right? No matter what the size is, you have certain things, certain chemicals that naturally develop in your brain that influence decisions, right? Dopamine, serotonin, adrenaline, all of these things that you really don't have that much control over. You can't just will yourself sometimes to be calm, but you could develop techniques to do that. And so the nice thing about the micros is now you're trading real money. Now you're experiencing all of those other phenomena that you're not going to experience in the demo account. And then once you get your technique down, right? Once you get your technique down and you decide which indicators you want to look at and what your methodology is going to be, then then after that point, graduate to the classic or the bigger ES. That I think is a good pathway for a lot of folks, right? Not for everybody, but I think it's a good pathway for a lot of folks. And you might have you might have much more risk capital, and you just want to start with the ES contracts, the big classic ones, the one I'm using, which is fine also. Okay, so hang on a sec, guys. Let me just kind of the Fibonacci is simple. You just literally someone asked how to add it. I mean, you're just going to pick it right from your drawing tool menu. There's all these different drawing tool menus, which is awesome. And you're going to click to do it. Now, if you just wherever you want to paint it on the chart, you paint it on the chart. And then the properties area here gives you the ability to customize it a little bit, right? So I have the text location inside left. I have a couple of price points, fib numbers that I have invisible, namely the 23.6 and the 76.4. And you could extend the lines all the way across if you like. So that's kind of how you do it. That's how I did it anyway. It's pretty straightforward. So you could put your fib line you could paint your Fibonacci anywhere you want on the chart. Kent, I don't know the answer to that question. I'm going to write this down, auto fib. I do it manually. And I know what Kent is saying is, hey, if the market starts making new highs now, you're going to have to adjust your fib line. You're going to have to adjust your fib retracement by pulling it up, right? And that's a thing. That's for sure a thing. We saw that yesterday when we saw the market go all the way across from high to low. We went all the way across the whole entire range and span. We had to keep moving it. So Fabio asked, do you give a day trade class somewhere? This is it. This is it. We'll in September, look for some additional educational opportunity events that we're literally building right now for everybody. And there's going to be some specialty events. There's going to be more of what I'm doing today coming in September. So just kind of hang tight, keep an eye out on NinjaTrader for alerts and updates and stuff like that. And you could always email me as well and say, hey, Jim, what's up this week? Be happy to answer you. Okay, Amit asks any minimum that you should keep in your account. Well, it's again risk capital, Amit. You could open an account for $400 if you wanted it to go that low, or whatever you're comfortable with. So give yourself a little bit of breathing room, right? Get a little bit of breathing room, because every day is not going to be a winner, right? Every day is not going to be a winner. Anybody, not just you or me, but for anybody. Let's take a look at what these candles are doing right now and see if we're on the right track or we're not on the right track. We could take a look at some other numbers, other markets. So let's take a look at the candles. So we have buyers coming in, and actually, let me tell you exactly which bar this is. This is the opening bar, 830 to 840, right there. We have buyers coming in and pushing the market up. Next bar, buyers coming in, pushing the market back up. Now we have just pretty classic kind of degradation, and it's slow degradation, but we still, right now, we're still at an area of support, right? And let me draw my rectangle. Everybody knows I like to draw rectangles, and I'm just going to draw a rectangle to say, hey, this rectangle right here, I'm going to make it bigger than so you can see it better. But this is my area of what I'm going to call support, right? We haven't been able to close. The candle hasn't been able to close in this box right now, right? It hasn't been able to do it. Now, we know a lot of times the market peaks into it. And in this case, buyers came back up and pushed us up. Now, my order down here is pretty far into the rectangle, right? Because I really want to see these two big wicks, or I guess they're wicks or tails or whatever you want to call them, attacked a little bit, because we do see that phenomenon a lot. Right. We do see that phenomenon a lot. And, I'm still above the 61.8%. So I'm comfortable there. Now, with this technique, I have to be patient and wait. Right. And we might not get a fill. Right. That's the second best thing that could happen to you. The first best thing is you get a fill and you make money. The second best thing is you don't get a fill. And the third best thing is not a best thing. It's the worst thing, but it's you get a fill and you lose money. So it's okay not to get filled on your trade idea, because there's always another opportunity. There's always another market. There's always another idea. Okay, so that, for what it's worth, that's my opinion. So I could make this. We could go ahead and change the settings here to maybe something a little bit easier to see. There we go. So we just pretty much have a box there. So we're just gonna leave that there. We're gonna see if my idea is right or if my idea is wrong. And remember, a lot of times my idea is wrong. Sometimes it's not. Sometimes it is. Let's take a look at my cheat sheet for today. Before we look at a daily chart or anything else like that, let me pull it up here. So every morning I come in and I say, okay, what's going on today? I'm here pretty early in the morning, and I want to see what economic releases, planned news. There's planned news and there's unplanned news, right? Planned news is stuff that is published on Econo Day or in the CME Group. CME Group has a great economic release calendar. You can get all this information. It's readily available on the internet. And so, I look at things that I think are important to me, and at 7 o'clock Eastern time, this was 6 o'clock in the morning, Chicago time, the MBA mortgage application folks have, they publish this weekly report. And actually what I'll do is I'm going to cut and paste that. I'm going to cut and paste the link of the actual report into the chat bar, so you don't have to kind of search around for it. And I kind of track, what's going on with mortgage applications. And, this is really a kind of an important indicator to me. Not only that, but also the refinancing index. What's going on with, are people buying houses? Are people refinancing? Why are they doing it? Is it because they're afraid interest rates are going up, or because they made so much money in the stock market that they could afford a bigger house? I don't know what the details are on that. But, when I see an increase of 2.8% seasonally adjusted, that doesn't move. That's not a huge number. It doesn't move the needle for me. But it's something I want to know about, and I can compare to the previous weeks. Refinance rate increased 3% from the previous week. Again, in my opinion, not a huge number, but something I want to keep an eye on. So this whole first indicator, economic release didn't really move the needle. This did. 7:30 Chicago time, 8:30 East Coast time. CPI, Bureau of Labor Statistics, pumped out this number, and we saw that big green candle that we could see so famously on the left-hand side here. And so there's core CPI. There's all sorts of variations on what they measure for CPI. And energy's always not always, but recently has been a kind of bumping everything up, right? Kind of putting pressure on everything else, because we know what's happening with, as a matter of fact, the White House today said, hey, there's we're not happy with OPEC Plus's recent disclosure of what the supply, crude oil supply should be. We think they should be bigger. It should be more than that. And part of that has to do with the crude oil price, but obviously all of it has to do with the crude oil price. But so is the White House was critical today on that. So energy is a big focus on this. But I think this number kind of calmed everybody's fear. These numbers suggested maybe that the recent run up in CPI is starting to curve down, trying to hook down, starting to slow down, and maybe this won't be a long-term problem for the Fed. Maybe it will, maybe it won't. But I think that's the reaction to it. Here's a kind of a chart I just cut and paste from their website, which just kind of shows the monthly CPI numbers. This is a monthly number, right? So we're kind of back down to 0.5 on the percent change. And then the next chart down here just kind of shows, all items, and then all items less food and energy. They like to do that. They like to take out food and energy out of the analysis, just to kind of show you the difference, right? We're talking about eggs and milk and staples that we buy at the grocery store. Here's the detailed report if you guys really want to get into it. And CPI, it's consumer price index, right? It measures inflation, right? And this is, one of the two things that the Federal Reserve is charged with, which is keeping inflation in check. That's number one. That's the first thing they're in charge with. And then the second thing is promoting full employment, right? So when they set their monetary policy, there's a couple components to it. There's, what are we going to do with interest rates? We're going to peg the Fed funds target rate. Right now, it's 0 to 25 basis points. It's pretty low. This is pretty much almost as low as you can get and not be negative, right? And that's kind of number one. And then the other thing they do is they buy assets, right? They buy assets. And promote that asset appreciation through that process as well. At a certain point, they'll taper and they'll start selling their assets off to kind of get to a normal environment. But we're not there yet. These are all strategies and tools that they use. The Fed uses when they're trying to keep inflation in check and promote full employment. So that's what CPI is. And the link I sent you would be a good starting place to read about it. There's a lot of good information in there. And then you can go to the regular website and get all sorts of interactive charts and stuff like that. Today at 9, Atlanta Fed business inflation expectations came out. That's another thing that's planned. I haven't seen what that is because we were doing this event. And then the EIA petroleum status report. This is a big one it's just kind of a supply report, US based, that really does move and set the tone for the WTI crude oil contract, which we see here in the U.S. So if you're trading energies, that's important. So, and anyway, that's kind of my cheat sheet right now. And what we're seeing here is some level of market consolidation in this area. Either you could call it price happiness or you could call it consolidation. And if you really wanted to be clever, which I am not, I'm just going to draw a real rough triangle right now. And it's, the idea here on these triangles is, okay, so, this is this isn't an ascending triangle. This isn't a descending triangle. This is a symmetrical triangle, right? And it's really crude. I didn't even match up the ends. That's how how bad I am. But I just went from high to low. And so we're kind of seeing some consolidation. We're seeing, and then the idea is, okay, we're going to break out or break down, right? We can't, once we get to the point, something's got to happen. You know, we have to trade higher or we have to trade lower. And right now, I don't know the answer. We're right in the middle. We're right at the point of control. There's a lot of market happiness right now. And, you know, the counter trend trade idea, maybe it would have been a good one that we didn't do. I'm not a fan of it, but sometimes it's a good idea. In this particular case, we're being patient. We're waiting. If we wanted to be more aggressive, then we could certainly raise our limit order higher. Daniel, that's a great question. Oh, you can't see the link in the chat. Okay. Let me. I think my colleague at Ninja could actually cut and paste that depending on how you're. Here it is. So it's kind of, you know, it's not easy. I'll leave this up here if you want to copy it. Let me just kind of push it up over here to the side. We'll leave that up there for now. Dan says, hi Jim, do you use fixed or dynamic stops? Do you touch your stop loss in a trade or just leave it no matter what? That's a great question. So I think here's my philosophy on it. Again, my opinion, my philosophy is this. Once you come up with a trade idea, right? And let's just say for argument's sake, I'm going to go ahead and put a stop loss in here right now. So I'm just going to right click. Oops, I'm sorry. Right click and just put a stop, right? So here's my entry. And then once I'm filled, this will be my stop, right? Down here at 31 1/4. And so my whole philosophy is with a 10-minute chart, I have a 60-minute window for success, right? I have a 60-minute, and this is a loose rule. It's not a hard and fast rule, but I'm looking at a duration that's going to be not all day. It's not going to be 1 minute. It's not going to be even 5 minutes, even though we might be successful in 5 minutes. It's going to be that time period. And after that point, and particularly by 10 o'clock today, I would start thinking about moving the stop, right? And I would start thinking about actively managing it. And we do that in sessions we do three of these a week. And we do these sessions, and you could see what my thought process is and how to do it. So I do think there's a manual, depending on your time frame, there's a manual the process. Now, if this trade, that I'm demonstrating right now, if I thought, you know what, I want this thing to ride all day, I'm going to leave it alone, then I would leave it alone, right? But my time frame isn't all day. It's not all day. It's less than that. That's kind of how I look at it. I look at other markets all the time. We're just kind of limited to some real estate here on the screen. I'm going to go ahead and move this over here for a second. I have my quote board here, and I have some pretty good muscle memory for what the markets are doing, and what I can kind of visualize what the chart's doing because I've been doing this for so long because I'm old. I'm pretty old, and that's that. So everything's in sync today. The Dow is going the same way as the NASI is going the same way as the ES. The ES is probably a little stronger than the NASI, just looking at it right now. And so I do look at this quote board all day long. It's really an important thing. The mid caps are getting hammered a little bit here. I'm not hammered, but they're down. So it's not 100% in sync. These aren't 100% correlated, these stock index futures, but there's something to look at. On the bond side of things, it's almost unchanged. 30-year Treasury bonds are almost unchanged, which means yield's almost unchanged. And I think we see that in the 10-year note also. I think the 10-year note absorbed the CPI number, and they decided that we're right, that we're on the right track. No yield, no reason to change the yields on 10-year notes. It's almost unchanged on the day. Crude oil again. We have a number coming out right now. I think 9:30. Yeah. Again, it hasn't really moved the needle on crude oil. Still trading, pretty close to, we're 70 cents off of where we were. Natural gas, same thing. Heating oil, same thing. Gold up $12, but gold's kind of volatile, so that $12 number isn't that huge either, right? So I'm looking at, and the currencies aren't doing anything. The currencies are kind of just staying pat right now. And remember what a currency is. A currency pair, it just measures interest rates between the two companies, between the two countries, right? British pound versus the U.S. dollar. You know, where are investors going to seek more attractive investments, and it's depending on interest rates. So that currencies are important to look at also. So these are the asset classes you could change, and there's micros in most of these. There's micro currencies, there's micro gold, there's micro crude oil. We've traded 41,000 already in the micro crude oil market, pretty good. You know, the bonds, they really don't have a micro contract right now that's ready for us. But then in all the stock index futures, we have that. I'm going to pull that aside. Okay. So the high-low indicator, let's see, I'm just going to right click. It looks like we're going to break down into my area right now, which is cool. I'm going to right click and I am going to select my indicators. And a pop-up window pops up here. And I added, it's called current day open, high, low. That's what I added. So I selected it up here from the indicators, right? Look for current day, which is right here. Once I highlight it, you hit the add button. It brings it down here. And then once it brings it down there, you could highlight it. And then you could customize it if you want. You change colors and stuff like that. Or maybe you don't want to show the open, you know, you can get rid of that. Just check that box and hit apply and you're good to go. I'll leave that up here for a second. The great thing about NinjaTrader is you pretty much right click on something and you get something, right? On you right click on something and you get a menu that'll help you customize and tailor. All right, we're back down now. Finally, we have a decent, now we're attacking these two, and I use the word attack, but you know, we're going after these two wicks right now. I think we're in a good spot. Let's see what happens here. We're going to be patient. Now, this particular sell stop I put was kind of random. So let's take a look where I really want to put it, right? Where I really want to put it. I'm going to squeeze back up here, and I'm going to look at yesterday's point of control. I want to be south of that. So I'm going to go ahead and just kind of, oops, I messed that up. Just drag it down. So all you got to do is drag it down, and we'll just place it there for now. So let's kind of, you know, again, this is where the dynamic stop management's coming in. You know, we will, I know it's a pretty far stop, right? It's a catastrophic stop at this point, but it's really only it's about $300 worth of risk, right? It's six handles or 6 points from where I want to enter. We're getting close. You know, I know it's kind of frustrating. You want to get in. We're 4 ticks away from getting in right now. You can see that black label moving around in real time. You know, that's mark to market. That's the price. That's real time data streaming in there. My order sitting there at 36.25. Everybody's natural inclination, including not everybody's, but I think most people's natural inclination is to I want to chase it. I want to get in. But I'm not going to do that. I'm going to be patient and I'm going to wait. Because maybe I could have a 4-tick advantage if I do get filled, right? Right away, I got a 4-tick. The other way to look at it is I don't want a 4-tick disadvantage getting in. So I'm going to be patient and I'm going to wait. Daniel says, gotta love the VWAP indicator and NinjaTrader. Thank you very much. I like that. You know, we should explore VWAP, volume weighted average price, in a future event. I'm going to write that down on my notepad here because I do get a lot of fan mail on VWAP. When you hear VWAP, volume weighted average price. So that could be a good thing. And then standard deviations around that is good information. People trade off of that. And we could explore that. That's the beauty about doing this every week. And we're going to have several more events in September is feedback from you guys and points of view that are different than mine. And hey, Jim, that was a dumb trade idea. Or hey, Jim, that was great. But these kind of, I have thick skin. You can't offend me. And I don't know everything. So it's really important feedback, collaboration. Tell your friends it's free to be here. You don't have to pay any money. And that's it. Okay. So why did I pick that number? I want this candle. I want to attack this candle here. I want this wick here. You know, it's close to the 61.8%. It's a little more aggressive than I'm used to, but that wick right here. Let me get my crosshairs out. Is what I really want to get to. I really want to see the market attack that because I see it so often, and it doesn't always work in my favor, but I see it so often where these big wicks that suggest buyers are coming in, and then another follow through, buyers are coming in. Those things get challenged every once in a while, and we did challenge it. Maybe my entry was, we're a couple ticks away, so we'll see. We're 2 ticks away, 3 ticks away. Maybe we'll get it. Maybe we won't get it. That's part of the fun for me. Hopefully everybody here is having fun. I don't know. So, or whoa, who said this? This is from A. There's NinjaTrader clearing now, man. NinjaTrader clearing is the way to go. I mean, this is a brand. This is work that's been really a lot of work's put into this. So when you do open up an account with NinjaTrader, and again, there's this commission rebate. I'll talk about this in a second. But when you want to open an account, you're going to go to the website and you're going to be able to open an account through this entity called NinjaTrader Clearing, right? This is part of the whole integration that happened with Transact and Infinity and all that stuff. So you don't have to choose between the two anymore. Unless you have some kind of weird entity account, then call me. Let me know. In any event, let me pull that off. Didn't get it. We didn't get it. Look at that. We traded. Now, why? Someone might say, hey, we traded at 36.25. How come we didn't get our fill? Remember, when you're here, let me show you something. Let me answer my own question by showing you something. I'm going to go to tools. No, I'm going to go to new. I'm sorry. Ooh. I'm going to go to, let's go to the DOM right here. Okay, so what market do I have on here? Let's just go to ES. Now I'm going to freeze the DOM right now. So literally, let's just pick 38.75. You see a number of 164 in there. Now it's dynamic. I froze the ladder, but it's dynamic. And that means there's 164 orders that are at the exchange waiting to be filled. So if I were to add one, I'd be order 165, right? And it's just like going to the bagel store, and waiting in line. And there's, you're the 12th person in line, and maybe there's only 11 everything bagels. You're not going to get yours, right? And so it could trade at 38.75, and until you get to the front of the line, you won't get a fill. Market bounces back up against you, rallies back up against you, then you don't get your fill. So just because it trades and limit orders, just because it trades at that price doesn't mean you're necessarily going to get a fill till you're at the front of the line. Alternatively, the market cannot trade at 38.50 without you getting your bagel, right? You're going to get your fill. So it's just by definition, it can't go. You're blocking the market. It can't go any lower. It can't go past you. You have to get it, right? You're in the order book. So in any event, that's, I think we just saw that phenomenon right now. We touched it, we didn't get to fill, and that's the way it is. That's the way the ball bounces. So, and I feel like we had a good trade idea. I feel like it's not over yet. It's 9:39. We're gonna get one more bar right here, and if we close within my rectangle, I am going to move my area of support. Make sense? Hang on 1 second, guys. I got one little thing I have to do here. All right, sorry about that. Front of the line reminds me of the quants. Quantus? I'm sorry, I'm not following. Let me put my glasses on and make sure I'm reading this word right. I think you mean quants. Michael, so generally speaking, you have a couple of different data options. You could have what's called top of book, which gives you the best bid and ask, just the top bid and ask number, which is cheaper than the 10 ticks deep that I have. It's like $1 versus $10 or something like that. So you could opt into the whole, depending on what markets you're subscribed to, you could opt into the whole 10 tick deep data. So Amit says, but it can pass your stop. Well, stop losses behave like, think of stop losses behaving like market orders, right? Stop losses behaving like market orders. You get literally once the market hits that price, then the trade is triggered, right? The trade is triggered and it becomes a market order. You get filled at the best available price, which could be better or worse than the number you wanted, right? And on a thin market, you can get slippage and it could move quite a ways against you. So trade the liquid markets. But that's exactly right, Amit. Just the definition of the two order types are different. You know, the way I put the stop in was it behaved like a a market order, whereas limit orders don't have that behavior. It's totally different. Richard, thanks. Yeah, I know it's a hard thing. I mean, you could blame the software as go, oh, I didn't get my fill because your software sucks, but your order's at the exchange. It has nothing to do with the software. Once your order's at the exchange, it's out of your hands. You know, it's first in, first out, FIFO. There's a whole bunch of there's a lot of videos, man. All right, so there's a lot of videos, how-to videos on the website. There's the YouTube channel has a lot of how-to videos. Keep coming to these events. Shoot me out an email and say, hey, Jim, I'd like to see this at next event. Could you help? So I think the more that you participate, and once you start, you fund a small account and you get rolling, then you're going to be in good shape. Let's focus on my rectangle though before I go back to questions. And oops. I am going to bring it back down now, and I'm gonna frame the conversation again and say, okay, so now we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars worth of information that tells me, hey, there is this is now the area of resistance, right? I'm sorry, of support, and it's strong. It's tested. All of this data can't close back in there. We could peek into it. And again, I think my order entry here, is going to expire, right? I'm going to run there's going to be a point in time when this is no longer valid to me, and I just want to get rid of it. But we'll wait for one more candle bar to see what happens with this one. Let me get rid of my triangle. See, we broke out down. Right. So and that's the other thing. You could enter on a stop, right? You could say, hey, I want to sell on a stop if we break through the triangle and I'm going to buy it back lower. That's a technique that people use on triangles and breakouts and stuff like that. So let's remove it because it's no longer a thing. I'm going to go ahead and again, right click does wonders in the charting software. Okay. Right. So Morgan, what I did was I lowered. It just kind of reestablished this. I just reestablished this rectangle and say, okay, so now the area support's a little lower right now, right? Because we closed in it before, and once we start closing in these areas, then you got to be a little bit more you're manual in your thinking. And more dynamic with the chart, and then it'll give you a nice clear picture. And sure enough, that's where we're at. We got 6 more minutes before the next candle forms, so I'm not going to make any trade decisions until then, and then we'll see what happens. You're just glancing across the board. Now NQ now is down 4. YM strong, it's still over 200. RTY is where we left it, and then bonds now are breaking a little bit. We're down almost a half a handle, right? That's a ZB. That's, it used to be US, but then they had the night bonds and the night pit in 1984 or 5 or something like that. So they created a new symbol. So you had you had US and ZB, and then ZB became the electronic ticker symbol. So now we're down almost I don't know, somewhere between a third and a half of a point in the bonds. And remember, each one of these ticks, this is 13 ticks, is worth $31.25. So, we've moved, it's a $400 move almost in the bonds right now since we started talking, which, is impressive for sure. And bond prices are not necessarily inversely related to equity prices. Sometimes they are, sometimes they aren't. Okay, crude oil, nothing, 52 cents. And then gold, 14 bucks. So, really there's the other markets aren't really helping me or hurting me. They're just kind of there, but I am going to keep my eyes on the bonds. I am going to keep my eye on the Nasdaq. And we could even pivot, but let me just show you one other thing here before we pivot. Let's do the, let me just open this up. And let me just manipulate this a little bit. This is just a daily chart, right? I use this to form my bias. What's my bias of the day? Well, my bias today is bullish, right? We're an upward pattern. I drew this this area, this channel a few days ago. We closed above it, doji-like kind of idea here. It would be a dragonfly doji if we were at the bottom of a chart, but it's not. And then we creeped up, and then we rocketed up, right? So we broke through. We're trading well above my channel right now. Again, really kind of enforces the whole bullish movement. Let's go ahead and open up another daily chart. This is the Nasdaq. So the Nasdaq is not making new highs right now, right? The Nasdaq is not making new highs, and it's literally, it's still pretty bullish in my opinion. But we are having this little curve down here. We have a pretty good, regular long-legged doji here developing for today. We've got a long way to go for today. And then, the highs up here, areas of resistance are at the highs. So you could draw rectangles, you could draw all sorts of stuff. I'm just going to draw a line in this particular case. Let's just try to kind of roughly. And a lot of these areas are not, to the tick scientific, right? There's too much volatility going on. Things bounce around too much to do that. But right now, breakout here would be interesting. One might say, hey, I want to draw a triangle right now. Why would you draw an ascending triangle? Well, because it is an ascending triangle, right? So this could be considered an ascending triangle. And we talked about this yesterday, and typically ascending triangles, at least from a textbook point of view, are, at least from a textbook point of view, eventually do one of these things. Oops, I didn't want to do that. Let's go to, the ray was not a good idea. Airline, there we go. Is that kind of, that's a textbook type of, I don't know, call it ascending triangle. And then if it was the opposite, it would be a descending triangle. And then in the middle is what's called a symmetrical triangle. So this is kind of a classic, you could say this is kind of a classic chart pattern right now. And again, it could be wrong. We could break down here and definitely retrace back down. But right now, my line's crooked. There we go. Ascending classic textbook, in my opinion, my humble opinion. Okay. David says, the thing is, you want to make money. I guess I would have bought the lower tail. Okay. I mean, that's totally a valid opinion. I respect it. Saf, I'm going to say your name so wrong. I apologize. I'm going to call you Saf. Why do you prefer a 10-minute chart instead of a 5-minute chart? And that's just my thing. I mean, you could master a 5-minute chart, and then my duration for my trade would be a multiple of 6, right? I'd want to be in and out in a half an hour. 10-minute chart, I want to be in and out in an hour. 1-hour chart, I'd like to be in and out at some point in the day, swing trade. So that's just kind of the mental math I use. Everyone's different though. If you could master, your setup at 5 minutes, go for it. I mean, do it, practice it, get good at it. It's a perfectly valid thing to do. So Busy, thank you for that. Tons of videos on it. So volume profile, today was probably not the best volume profile day, but let me show you how I look at volume profile while we're here. And I'm going to just kind of spread this out a little bit more to give us some more room to work with. And then also, I'm going to kind of declutter my chart here so I could kind of just show you a little bit better. I am going to go to my indicators here. It's called order flow volume profile. I want to change my opacity right now so I can make it easier for everybody to see. So my profile opacity, I'm going to change it to, let's say, 60. See if I changed the right one. I did. Okay. So now The light blue area is called the value area, right? This is one standard deviation worth of volume, right? The light blue area, the dark blue area at the top are called prices above value. The dark blue volume at the bottom is called prices below value, right? Now, in this particular case, we have somewhat of a double distribution. This is overall, this is not a normal bell-shaped curve or Gaussian distribution. It's got two nodes on it, right? So, but I'm going to focus on the top one because that's post, our CPI number, and I'm going to say, okay, this value area here, the idea is we want to buy at the bottom of the value area, we want to sell at the top of value area, because the point of control, which is the longest one, oftentimes acts like a magnet. Doesn't always. I mean, we just coincidentally, we're trading there right now, but look at how many times it's crossed this point of control since we started, just about every single candle, right? So literally, depending on how aggressive you are, you could buy below, sell above, buy below, and that's the whole idea of the point of control. And it was kind of a phenomenon, I think, originally developed with market profile. But once the software got so good and the volume-based tick by tick data became integrated into these terrific charting softwares, into NinjaTrader, I think the volume is a better way to go than the market profile from a day trader point of view. Again, my opinion. Michael says he's late. Michael, you're like way late. You're like 52 minutes late. I actually started a couple minutes earlier, 54 minutes late, but that's okay. This is going to for sure be recorded on our two pieces of good news. It's recorded on our YouTube channel. I don't know how long it takes to get the recording up, but it's pretty quick. And then number two, Michael, is we're going to do this again next week, the week after that, and the week after that. So you didn't really miss anything. And every day is different. Every time we do one of these things, the market behaves differently than it did before. Diane, I don't have my glasses on. Hang on a second. Dima, is point of control part of the volume profile? Yes, all point of control is, it's a fancy name for the histogram bar with the most volume in it. That's all. It's the histogram bar with the most volume in it, and I color code it so we could see it better. That's all. That's all it is. It's all part of it. It's just volume. And it's not, the nice thing about volume, the candles are kind of our time series analysis, where volume isn't. Volume just accumulates, right, over time. So it gives you another look, maybe a longer term look of where buyers and sellers are generally happy. Where this market is priced correctly. And I use the word correctly kind of, I shouldn't use the word correctly, but where there's market happiness overall, where buyers and sellers agree, this is how this particular stock index future should be priced. So that's the kind of the way I look at it. Okay, Morgan asks, can you demonstrate putting up that whole volume profile on the right side of the chart? Okay, it's on the right side of the chart right now. So let's just go to, again, my indicators. It's going to give me the ability to select order flow at the bottom. And then over here, I have profile alignment. Let's just make it left, just so we can show you what that looks like. And then, okay. And now it's to the left, right? Now I put it all the way over to the left. So again, let's do it in reverse. Right click, and then I'm going to go to my indicators again, and it'll open up this area here, and I'm just going to shoot it over to the right hand side. So that's it's really that simple. And if you really want to get fancy, which sometimes I do, sometimes I don't. I'm a pretty basic guy. I'm pretty vanilla. I'm a pretty regular guy. But you do have a drawing tool called order flow volume profile. I'll leave this up here for the drawing tool, order flow volume profile. And if you select that from the drawing tool menu, then you could define your range. Just click and click, and it'll put a little mini volume profile just on the range you want to analyze. And so it's a really nifty feature, which means nifty is another word for cool. A cool feature on the NinjaTrader software. I like it a lot. Okay, so my trade idea is expired right now. I mean, because I am not. I don't know that this is a bad trade idea right now to keep it, But at 10 o'clock, we're entering into 11 o'clock East Coast, lunchtime. Funky stuff happens at the lunchtime. So me personally, my opinion, let's reassess. Let's reassess when we get to, maybe 1 o'clock with respect to this type of trade idea. So I'm just going to click on the X. I'm going to click on the X. I canceled everything. We're going to start from scratch later on today. And that's part of it. Part of it is patience, and, I didn't get in. And, there's many of you are way more active day traders than me. Many of you are, have a different time frame, a different methodology. But this is kind of how I roll, how I think about it. And that's it. We are going to, we had a successful session, even though, we didn't get a trade going, but, maybe next week we will. Okay. All right. Morgan wants the baby chart again. Let me show you how to do that. Let me just, first of all, oops, let me delete it. I'm going to go remove it. All right. So the baby chart, let me so I'm going to right click. I'm going to go to drawing tools, and it pops up this menu on the right-hand side with all of this stuff, right? I'm going to pick order flow volume profile. I'll leave my mouse here for a second so you can see it. And I'm going to activate this drawing tool. Activate it. Then I'm just going to pick a range. I'm going to click once. I'm going to drag my mouse. I'm going to click again. And then sure enough, it paints a volume profile that's unique to this particular time range. That's what it does. Hope that helps. Kent says, thank you. I'm on a 14-day trial with Russell. Very cool. Russell is one of the NinjaTrader customer support folks, that broker. He's very knowledgeable. I'm glad to hear that you're doing it. And I'm going to type in some content. Oh, let's talk about this promotion here before I quit. All right, $200 commission rebate. This is, in my opinion, this is a great promotion. Open an fund account by the end of August. You got two and a half more weeks, I think, to consider doing this. And then, fund it with $400, and then you'll start accumulating commission rebates as you go forward. If you're anywhere, if you're going to be trading, this is probably a pretty good promotion to consider doing it. And it's just all over the website. You can just find it and go, right? It's super cool. Hit the open account button, and it will apply to your account. Other types of things that I want to share with you really quickly are basic. This is how you get a hold of me. I'm gonna cut and paste it. And again, this is the website. This is, on the website, you just put, if you want to try a practice account, you throw your email address in there, and you'll get a username and password and all sorts of information directly to your email address. So put the accurate email address in there. So otherwise you're not getting it. And then there's the open account link. And then equally as important, here's my email address, jim.cagnina@ninjatrader.com. And then this is actually I'm going to give you at the risk of living dangerously, I'm going to give you my direct telephone number, 312, oops, what happened? 423-2233. Give me about a half an hour after this event, though, before you start calling. I got to get some more coffee and consider my lunch options. Okay, so Matt says, need a mini VWAP from drawing tools for measuring a leg move, just like you did. All right, so this is what I love about this. So Matt, I'm going to cut and paste this. And, this is for the suggestion board. This is a good one. Stuff like this, feedback like this, really super great. I really appreciate it. Anyway, tell your friends, it's free. You got to fill out a form, not that hard to do. Tell your friends, your neighbors, your countrymen, heck, tell your enemies to come. We'll make them friends. We'll turn it around. We'll make them friends. I do want to remind everybody, trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Slow your roll with the day trade margins, risk capital only. Reach out to me anytime. Real-time practice account today. And let me end it with this. Be safe out there and be good to each other. Take care. Thanks for being here.